This morning's webinar, all around the legal challenges of growing a business. Now, Joanna Oakey has been a guest on our webinars before, so looking really forward to having her back and talking about all of this stuff that often we forget or we put off until it's sometimes too late. So yeah, I guess this is a bit of a proactive approach to getting your legal stuff sorted, and yeah, some really cool things we're trying in this webinar as well. Before we do that, as usual, we usually just talk through a couple of things before we get stuck in as people join as well. The first one is all about funding property development. So this is our next webinar, sorry, and we've got this with Scott McGregor, who's going to chat us through things like funding structures the banks commonly use. And this is kind of like bigger property development projects. So things like commercial stuff, or even, you know, you got one block going into 5 or 10, things like that. So the more advanced stuff, first mortgages versus second, or mezzanine finance, LVRs and terms the funders like to see. So Scott spent lots of years at big banks, and is a great source of information for this stuff. So Rose from our team has posted the link if you're interested in that one in the chat box, and I think that one's actually next week. If I would just double check. No, it's not. It's the 28th of July at midday. So yeah, looking forward to that one as well. For some of you who don't know me, my name is Ben Walker. I founded Inspire, which is an accounting firm based in Brisbane quite a few years ago now. And yeah, really love what we do here. So far, we've saved, and this slide actually needs updating, but we've ticked over $14 million in tax savings for our clients. And we killed our goal in tax planning time. The last couple of months, we aimed for $2.1 million in tax savings, but ended up getting over 4.3, which is a huge result for our clients. And the cool thing about that is we actually give a day's worth of access to food, water, health, or sanitation to families in need as well through B1G1 for every dollar of tax we save. So that is pretty exciting. All right, well, I'm about to hand over to Joanna Oakey, but before I do that, I'll just give her a brief introduction and talk about something cool that she's going to try in this webinar. We've never done it before, so it's going to be pretty interesting. So Joanna is the Managing Director of Aspect Legal. She specialises in helping growing businesses acquire, consolidate for growth by building a fortress around their assets, and eventually exit in a way that draws the optimal value that they deserve out of their business. Now, Joanna has done a webinar with us before. It was probably about a month ago. We've got recordings if anyone's interested, all about the acquisition process and when you're looking at mergers and acquisitions. Really, really cool. Joanna is also a podcast host of 2 podcasts, Talking Law and The Deal Room. So yeah, welcome, Joanna, to our webinar. And before I just hand it over to you, Joanna's got a really cool thing she wants to do today, and we'll post the link in the chat box in a sec, but it's actually like almost like a workbook or a self-assessment to go through as we go through different topics in the webinar. Have this open on your computer, on your laptop or computer, whatever you're using, and it's almost like a self-assessment out of, you know, there's sliding scales of 0 to 5 on certain things that she's going to talk about, and even to take notes as you go. So she'll tell you more about that, but pretty cool to have that sort of interactiveness and yeah, self-assessment through the webinar.
Let's see how it goes, Ben. This is a bit new, so we'll see if it works, but it's a good way for you to chart along and make everything we're talking about today super practical. I guess that's the point of it. Yeah.
No, I reckon it's very cool anyway. I'm going to be doing it.
Fabulous. Great. Okay, we've got a link there too for everyone, so you can click on that link. I should do that too, so remember what you're looking at.
All right, I'm going to stop sharing this side, and feel free to.
Okay, I'll take over. So foundations for the future. I'll start my slide deck in a second, but just as a quick overview, foundations for the future is the name that I've given this self-assessment. The reason for that is what we're talking about today is laying the foundations in your business and firming up the foundations in your business to ensure that it can withstand growth. So that's why I call it foundations for the future. That's how I see it. And in fact, the things that we're covering today are critical for building that foundation for the future in your business, and to ensure not just the success, but also the longevity, and that it actually withstands the tests of time. So I'm going to open my slide deck, and you can, in the meantime, just add your email and your name and then click to the next page. And there's notes as you go, so you can fill them out as you go. As I'm talking with any of the notes, and of course you get all the results, so you get this. Alrighty, so of course today we're talking about the legal challenges of a growing business and how to survive and thrive through growth. And if there's any questions that you have along the way, can you please send them through? I'll open the Q&A. I'm happy to answer any questions along the way. I love for this sort of thing to be totally interactive. I don't actually have any polls today. I usually have polls, but if you've got any questions, ask them as we go, because that's a great way that I can tackle issues, to tackle the questions of where you are right now. So we're talking about how to survive and thrive through growth. And this is a topic that I'm really passionate about. So just very quickly, of course, as Ben has said, my name's Joanna Oakey. I'm the Managing Director of Aspect Legal, and we're a commercial legal practice. So I deal day in, day out, and have done for 2 decades with business owners who are growing their business. And I see the challenges that come along the way that can really throw them off course. And in some instances, throwing them off course can be absolutely catastrophic. And I'm going to tell you this story today of one of the sort of foundation stories that really impacted the way that I practice law, and all of the, I guess, the perspective that I have on law for businesses. But it's not just about catastrophic issues. It can also just be about those little niggles that come up from time to time that take your eye off the ball. Because one of the things that is super important for growth is that you have the time and attention on that growth, and that your eye is not taken away by issues that are occurring over time. So I just want to share with you a whole heap of stories that I've seen over time, common issues that can take business owners' eye off the path of growth, when, ultimately they're so easy to prevent. And you'll see as we're going through the slides today, there's simple ways that you can prevent these issues. As Ben told you, I've got 2 podcasts. One is called the Deal Room Podcast, which is specifically about buying and selling businesses. So if you're interested in acquisition for growth, or you're interested in setting yourself up for an exit at some point, but want to understand how to maximize the value of your business and the saleability of your business, then that podcast is all for you. I think we're up to about 180 podcast episodes now on the Deal Room. So there is a ton of content there, if that's something you're interested in. And then I also have Talking Law, where I talk about general issues relating to shareholders agreements, employees, and all those sorts of things that we're going to be talking about today. So if you're interested in that, you might find that Talking Law is relevant to you. Okay, so where are we going next? Oh, wonderful. Thank you. Someone shared thanks, Nikki, for sharing the links to the podcast there. All right, so we have, why is growth the most vulnerable stage? And I really absolutely mean this. Growth is from my position, sitting as a lawyer, where we see issues come in, day out, growth is absolutely the most vulnerable phase for a business. Many people think that the most vulnerable phase of a business is in startup, and certainly that is a vulnerable phase just generally in relation to working out whether or not the business has legs. But the vulnerability in growth comes from the fact that you actually then have something that you don't want to lose, and that has value that you need to ensure that you're protecting. And it's so devastating when we see businesses in growth suffer issues that either take their eye off the ball, or entirely blow them up. And that's what we're trying to avoid by the information that we're going through today. So what are the characteristics that we see of growing businesses? Quite often they have a lack of structure and appropriate legal foundations. This is often because when businesses start up, they're in the startup phase, their legal documents have come into place, often from being begged, borrowed, or stolen, somehow compiled together. But we find when you're in this period of growth and you're building yourself up, your business up to withstand periods of growth and the bigger entity that you're growing it into, it's in a completely different situation it was when you set it up and put those documents in place in the beginning. The other characteristic of growth is that fires start appearing in the business that leach time, attention, and money. So at best, this can cause ongoing disputes and issues that start off as little niggles, but then can grow into big niggles that take you off course of growth and can create an unsaleable business. And of course, I know a lot about this because we see a lot of those unsaleable businesses when the business owners have gotten weary of all of the issues that have happened in their business as part of growth, and they just want to offload it. But that is the worst time to try and offload your business because it is almost unsaleable at that point, and you'll get a very low sale value. But at worst, it can destroy the whole business. And I just want to talk to you about this. I pointed to this initial story that was pivotal to my experience of being a lawyer. And I want to tell you the story. When I was a junior lawyer, I worked at a firm, and a man came in who ran a building supply business. So it's actually a scaffolding business. This is not a picture of his business, but an example of what that looks like. His name was Terry. So he came in and he'd been having issues in his business. Now he had grown this business all by himself to a really great point where he'd been able to step out of the business and appoint a general manager. And this may be for many of you the aim for you in business, which is to grow it to a point where you can step out and appoint a general manager to oversee the business. Business growing super quick, doing really well, employing heaps of people and lots of contractors and subcontractors, general manager appointed. But soon things went wrong when Terry took his eye off the ball, because one of their biggest clients started paying slowly, and it was only a little issue in the beginning, and then it sort of ramped up to a massive issue when suddenly that client just stopped paying. They had hundreds of thousands that was owed by that particular client. And they came to another issue that happened in the business that caused a cash crunch. When that cash crunch came and they couldn't get payment quickly off this client that owed them all this money, they were put in a massively difficult position. Now, we started them working on their matter and tried to started legal action against the client who hadn't been paying, but it was all too late. And ultimately, our client went into liquidation. And then after that, he was given advice to go into bankruptcy. He went into personal bankruptcy. And he came into the office one day to talk to me. I hadn't spoken to him for a little while. And he sat down and I said, how are you going, Terry? And he broke down in tears. So I was a junior lawyer, and this grown man was crying in my office, and he told me about how he'd lost his entire business, everything that he'd had to that point in the business. He'd lost everything personally because he was now in bankruptcy. He felt terribly responsible for all of the employees and the contractors who had lost all of their jobs and that he'd not been able to fully pay out. He had suppliers who were chasing him. He'd even had death threats for one supplier that he owed quite a bit of money to. And his marriage, his wife had walked out because it was too stressful for him. Like this was life-changing for him, massively impactful. And he was having a horrible time with the trustees in bankruptcy at the time. And I just thought at that point, this is so important. It is so important for growing businesses to put these protections in place. There are about 30 things that when I look back at his business, I could see he could have done differently in leading up to it. And it was so pivotal to me because it's impactful, someone coming into your office and you seeing the emotion of how much time and effort they put into their business and it just all blowing up so spectacularly. But it also occurred to me that he'd been let down by his advisors up until that point, and he'd created this situation to a degree by a lack of understanding of what he needed to do to set his business up for success from a protected position. And I thought, I don't want any of my clients to ever in the future have to suffer something like this again. And of course, things change in business. We're in a really difficult time in business at the moment with COVID, but the more that you can do to set your legal foundations up, the more protected you are so that you're not in this position. And, you know, Terry was not the only client that I've ever seen in this position. I've unfortunately had lots of clients who've gone through horrible business situations, but the story is exactly the same. If you have the preparation in place, you understand what you need to set up the legal foundations of the business, then you can help ward off these attacks. So that's what today is all about. So it's all about, I see this as building a legal fortress around your business. And I'm going to talk to you today about how you do that. It's building a fortress around your business and around the wealth that you're creating outside of your business as well. So there's sort of these two separate components. Awesome. We've got this self-assessment. Read along, fill in notes as we go. So here we go. Let's start with clients. Yeah, Ben, go for it.
I've just posted that link again for anyone who's joined since it was posted earlier. And just as a reminder, it's for note taking and also rating yourself on a scale of 0 to 5 for the different things we're going to talk about. But thank you very much, Joanna.
Please take notes there, because the reality is people can come to things like this and just, hear the stories, be entertained, whatever, and not take action. That's what we need today, is you to take some sort of action. And a lot of this you can go and do yourself. Okay, so clients quite often are the holy grail to us as business owners. You know, we, of course, we love our clients and do everything that we can to please our clients. However, clients can also be a source of a massive amount of risk to a business. And so one of the things, and obviously in the story that I was telling you about Terry, the slow payment and lack of payment by his client ultimately caused the business to explode. You know, so whilst obviously without clients and strong client relationships, we do not have a business. You have to also understand that within our client relationships sit some of the largest component of risk. So what are some common issues that I see again and again and again? Non-payment and slow payment are one of the absolute priority issues that I see. Now, non-payment and slow payment can be indicators of a number of things. Number one, a lack of agreement between you and your client in relation to what it is that they're expecting that you'll be providing as part of their service. So that can be one thing. And number two, because sometimes clients don't pay on time or don't pay at all because they have a perception that you haven't provided what you said you will provide. So part of the answer to that is about managing the communication in your relationship with your client and ensuring that you're encapsulating this correctly in a client agreement. Now, many people have a client agreement that they sort of create and then, like, to be honest, don't look at it again for years and years and years and years. A client agreement is actually one of those things that must be reviewed regularly because your business changes regularly. And part of what I really, what I want to convey today, one of the most important things to keep an eye on is the fact that your business changes over time and your approach to each of these areas that I'm talking about will change over time as well. And so you must have a period of time each year where you come back and you review each of these areas. So why don't you keep this self-assessment that I'm sending you, the link, you can just redo it yourself every year and go and see how you're performing in comparison to last year. So, so the first question, once again, add notes about your terms of service or your client agreement or your terms and conditions of sale. Doesn't matter what you call them, as long as it's something that embodies the details of the relationship between you and your clients. And that's what's their expectations of you, and what does timing look like, and all of those sorts of things. But what's your expectations of them as well? Because quite often you can't do your job, whether that's a provision of goods or services, if they haven't done something on their side as well. So that's really important to include in some way, either in the client client agreement or in the communication between the parties. So it's super clear to them what they're expected to do in this relationship as well. Okay, so non-payment and slow payment, we've talked about that. The other reason for non-payment and slow payment is a lack of provision in your client agreement about what happens if they don't pay on time. Now, you can do things like you can say that you have the right to charge interest, you have the right to charge administration fees. You can even, I've seen some great examples of business owners adding in things like the discounts for early payment or discounts for on-time payment. So that's sort of a different way of posing, fees, an alternative to imposing fees for late payment. You can set it up in the positive. But whatever it is, you should be thinking about utilizing your client agreement to help ensure that you have the right power behind you to enforce on-time payment if you're not getting it from your client. So we deal with the expectation first between the parties, and you should be using your client surveying tools like NPSs and stuff like that to make sure your clients are happy as well. But then you should also have the power that sits in the a client agreement, to ensure that you have the right to enforce things from a financial perspective that will make it increasingly likely that they'll want to pay on time. One of the things that I don't talk about here today, but is also another really important component for you to think about, is your cash flow processes. So how are you following up your debtors? Now, I quite often find that when we come in and work with clients who have really slow moving debtors, if we put in place a cash flow program, so that's, say for example, here's what you say in your first letter, let's change what we say in our second letter, let's change a bit what we say in our third letter, here's the script for when we have to get admin to make the calls to follow up, here's where, and you create a system where you're amping up the processes that your admin team are following with debtors. You often find that if you put in place something really systematic like that, that will also make a massive impact on getting your cash flowing quicker as well. But that needs to be backed up by rights that are provided in your client agreement. Does that make sense? And if you want to be able to pass on charges that relate to, say, for example, letters of demand or something like that, if there's a real big problem that has occurred that hasn't been solved by your usual processes, then you can, in your client agreement, pass all of those fees on as well. But it needs to be done in your client agreement. Otherwise, you don't have the right to pass on those fees. Okay, so dispute about whether services are properly provided. That comes back to this concept of is everyone clear on what you're providing and when, or is there lack of clarity? And this can be dealt with in your client agreement. And then the other massive component, just be aware here, I'm only talking about sort of the headline issues. Of course, there's heaps of other things that can go wrong here, but these are the most common that we see again and again and again. The next element here is this risk that liability is being passed on to your business that is not appropriate. And we quite often see this where organizations are forced to sign the client agreement that's being given by their customers. So if you're dealing with a large organization, a listed organization, a government organization, you'll quite often find that you won't be able to use your own terms and conditions. You'll need to use theirs, and you need to be super careful about what the liability, exclusion of warranty, and other risk-related clauses say, because in so many instances, we see that organizations just accept what they're being provided without realizing how much risk in the relationship that they are taking on. And that can be a really uncomfortable position when something goes wrong and those clauses are being enforced against you. And we've seen some horrible instances of that. So that's just another area to be really mindful of. And in your own terms and conditions, you need to be mindful that you have clauses that exclude liability appropriately. So go and answer what bit out of what I talked about now do you think might be a hole in your own client terms? Add yourself some notes here so you don't forget, and give yourself a rating from 0 out of 5. How protected are you in this area? from not being not at all, 5, bulletproof protection. Okay. All right. So, and the answer to this is the right client agreement, reflecting how you do business today. All right, so the next area that I wanted to talk about, and once you've filled anything, just press next on the bottom. Ben, if you're working away on it at the same time, please just tell me if anything's not working with the with the form as you go. I hope it is.
Good so far.
Good. Okay. So structure and asset protection is the next area that I want to talk about, because obviously, Ben, you'll be talking a lot about concepts of structure and asset protection with your clients. We're coming at it from a slightly different perspective today than obvious issues of tax and income distribution. Here we're talking about how does your structure and asset protection environment protect you personally and in relation to your relationships with other partners that you might have in the business. So what are some of the common issues here? Number one common issue isn't necessarily the one that I see most often, but it is the one that I see when it comes in can have the most massive impacts, and that's personal liability. Personal liability either through your role as a director or through personal guarantees that you have given as a director. Now, it can be a real trap. Many businesses just aren't aware of the fact that when some of your suppliers ask you to sign personal guarantees, you don't have to sign them necessarily. Often personal guarantees will come up in leases, in copier arrangements, in lots of different areas. But the problem is that by signing personal guarantees, you're linking that liability to you personally through the business. So you're sort of breaking that corporate veil that protects you. So be very careful about signing personal guarantees. And there is almost always another way. And we almost always find alternative ways for our clients other than personal guarantees. Now, of course, finance is something completely different, and there may or may not be alternatives for that. But we're talking here about the commercial agreements that you might be entering into. So that's the first issue. The second issue relates to, sorry, go ahead, Ben.
Yeah, Joe, and just on that first one, the other one I think we're going to see more of. I'm surprised it hasn't even been more than it has been with COVID hitting and businesses going impacted in different ways is insolvent trading. And that's one of the ways through the old veil, isn't it?
Yeah. Do you know what? You're so right. We had this period of time through the first lockdowns last year where we had some of the protection of some changes that had come into place temporarily to protect directors who may have had this risk of insolvency in the business. They're gone now. We don't have those protections in place anymore. And I just have to say, over the last few years, we've had a few clients, unfortunately, who've been in this situation. It's horrendous when clients, when business owners, directors, are threatened with insolvent trading, personal liability. It is awful. It is it's a very emotional process, and it's particularly emotional. It's emotional anyway, so you just have to be super careful about that, and that's where constant relationship with your accountant and insight into financials is so very important. And do not put your head in the sand, because this is probably the number one issue. Things start to go bad and business owners just start to shut down, and that is the worst possible thing you can do. Absolutely worst possible thing you can do. You must not put your head in the sand.
Deal with it.
Yeah, just you got to deal with it. And there's almost always ways, as long as you're quick. But the other tip is you need to be structured in your business so that if you're a director, you really just have very little in terms of assets in your own name. I personally think that that's a really important approach. So, sometimes that's easier said than done when you have, properties already in your name, but it's a good long-term strategy to bear in mind, because over time, as you change properties or whatever, you can sort of put things like that into place. But that personal liability as a director is real, and you must understand that. And you really got to be careful about having every man and his dog sitting on your business as a director as well. Think about minimization of who's holding that director role as well. Disputes with business partners. This is one I just see,
it's not close to home at all.
But look, it's I think I would dare to say, a very high percentage, say 80 to 90% of business partnerships will at one point dissolve. Like it just happens, right? People come in at sometimes the same time, sometimes different times, but their goals at the end quite often become different at different points. It's just the reality. But where this can become particularly problematic is if you've not set up the documents from the beginning to be able to deal with those disputes as they come. You need to approach business partnerships with the expectation that it will end in a way that you don't necessarily see eye to eye, and that you don't necessarily agree about exit, that you must start with that assumption. Then you can put in place the plan for how will you deal with that at the time. And you need to deal with, well, what if one person wants to exit, the other person doesn't? How do you value the business? What does that look like? What if one person's not pulling their weight and the other person feels like they're doing all of the work? How do you navigate this approach to business ownership together? And it must be documented and it must be discussed. Absolutely. And one of the issues that I see again and again and again and again is businesses might think about this initially, but then never get to the end of finalizing it, or they create it and they don't review it as time goes on to ensure that it makes sense with the evolving nature of their business. And the more often you review it, the more often you're reminded of what your agreement is. And my perspective on disputes is there are disputes wherever two people, there's some sort of ambiguity in what the situation is. If there's no ambiguity, if you've talked about it, if it's clear, almost always the dispute will fall away, because disputes only occur because each person thinks they're right, but that's not the same. They're not believing right is the same thing, if that makes sense. So personal liability, disputes with business partners, and difficulty exiting someone else in the business. Solution, shareholders agreement, up to date, regularly reviewed and signed.
It's a good one. Oh, dear.
Other documentation in place, the right licenses and loans. If you've loaned money into the business, you need to make sure that you've got your secured investor in the business rather than unsecured. And for director asset, sorry, what's that, Ben?
That's a great tip. If you loan money into the business, secure it.
Yeah, absolutely. You wouldn't, I was going to say, you wouldn't believe how many people, you probably would believe how many business owners put money in. And, they quite often don't tell us that they're putting money in. So we haven't got the opportunity to tell them that they need to get this. There's certain things they need to set up, and there's certain registrations they need to put in place to ensure that they're secured. And there's a period, a short window of time that they have to do this in. So super, super important. So with that in mind, have a look at your notes, add notes. Hopefully you've been adding notes as you go along. Do you have a shareholders agreement in place? Obviously only relevant if you have partners. Don't worry about this one if you don't. You can give yourself bulletproof protection, I guess, if you don't have partners in a business. Is this reviewed at least
that's
annually?
one way to protect against that.
Yeah, I guess that's right. Yeah. And many people do end up going down that path. Does it properly deal with decision-making, exit disputes, and other key areas? Give yourself a rating of 0 to 5 right now. And then how protected do you feel as a director? Do you understand your accounts thoroughly? Are you signing personal guarantees? Or are you really clear that you're not signing those? If you are signing those, have you got a way of recording them so that in the future when we get to exit of a business, you've got no idea how many people I say, have you got personal guarantees? And they go, oh, I think maybe I signed something back. maybe 10 years ago and they can't find it,
Yeah.
and that can be a real problem because you can continue to sit on there as holding this personal guarantee while someone else is running the business.
Yeah, yep. And sorry, we've just got a question relating to the directorship role.
Yep.
Jermaine's asked, how do you reduce personal liability as a director? Any specific advice, or have we kind of covered a few things there?
Yeah, I think firstly, be aware of what your duties are as a director. We don't have time to go through them today. If anyone's interested, shoot me a note. I think I've got a really short ebook on your duties as a director that I can shoot anyone who's interested. Maybe Nikki, could you shoot in the notes an email address that they can contact, and we'll get that back to them. So if you want that ebook, we'll send it out. Be aware of what your duties as a director are. One of the primary ones that for you to be aware of, that is one of the biggest sort of issues that we see practically play out, is this risk of insolvent trading. So be aware of where your financials are. Keep regular communication up with your accountants. If you're in financial distress, don't put your head in the sand. Deal with it front on. Have those discussions with your lawyer and Ben and his team to make sure you're on top of understanding what to do in this situation. Don't sign personal guarantees, as I said, or whatever, and protect your assets. So they're the main things, but also be aware of all these other things that I'm talking about. We'll talk about employees, and I don't talk about OH&S much in this, but that's another area of key potential risk as a director. If you've got employees that are in on building sites or things like that, that might be particularly dangerous.
Yep. Wonderful.
All right. What have I got? 20 minutes. I'm going to, is that right? I've got 20 minutes left.
Yeah. Yep. Just over. Yep.
Okay. Okay, cool. Employees and contractors, staff, we love them. Our business could not run without them. They're absolutely pivotal to the business. Just like clients, there's another side as well. They can hold a lot of risk for a business. So what's common issues that we see? At the moment, there's a lot of potential issues around incorrect classifications. So are your contractors really contractors, or are they actually employees? Are your casuals really casuals, or are they part-time? Are you risking the risk of double payment, i.e. paying them sort of a higher rate as a casual, but risking the possibility that they might be classified as a part-time or as a full-time or whatever, and you now having to go back pay entitlements. So these are real issues that are happening day in and day out for small businesses. Incorrect payments. We have a specialist employment team, and quite often as part of prep for sale, we'll ask questions about sale, because this comes out in due diligence. So we'll ask about the employees, and our specialist employment team will get in there and just find a mess. And it can sometimes take a long time to clean up. Incorrect pay slips, really old ways of approaching things, not complying with the award in relation to your staff is another key one. And there's this can cost you a lot of money. I'll give you an example. A couple of years ago, it was on Christmas Eve. So we're about to close down. This is why I remember this one so clearly, because it all happened over Christmas. One of our clients, who's a lovely business, they'd been running their business for, I don't know, like 25 or 30 years. So it had been there for a long time. Their staff had all been really long term. And they received one of the owners had an argument with one of the staff members. The staff members walked off and said, "That's it, I'm leaving, I'm not coming back." And so they considered them to have walked away. The next day, Christmas Eve, they received a letter from a legal firm who was a no win, no fee legal firm. I won't say anything more about that. That just went after my clients like you just wouldn't believe. They alleged unfair dismissal rather than there'd been an argument. The staff member had walked out, but my client didn't have very good documentation about what had led into this. So there was a claim of unfair dismissal. There was a claim of back pay over 10 years for a failure to give them a 15-minute tea break every afternoon for 15 years. So they were claiming 250 grand against my client. It was just like, this is a really small business. It was just before Christmas. It was horrendous. And my client, just beautiful people, just spent Christmas Day just completely petrified. It was horrendous, you know. And of course, I spent Christmas and Boxing Day talking them down. But ultimately, we were able to negotiate a settlement for that. But it cost them a bit of money because, in fact, they hadn't dealt with this 15-minute tea break that had been required in the award. And whilst we were able to negotiate a really good settlement from where they were initially, I think we got it down to maybe 40 grand or something from the 260 grand claim. That's still just a massive whack for a business. And some of those things you just can't do anything about. If they had have taken this further, our client would have been up for a lot more. So you don't necessarily know what you don't know. So you need to be on top of this. And, you know, I think you just need to have annual reviews in relation to how you deal with your staff, how you understand dealing with if things escalate and issues happen, how you deal with that. So you don't let someone just walk away and say they're terminating. In this instance, there are things they could have done, but they didn't call us until they got this legal letter afterwards, you know. So you need to be on the phone to your lawyers straight away. You need to understand what to do in these situations. You need the right documentation. And then over and above this, just something that happens very regularly is this issue of staff who depart, either starting up on their own and going to a competitor, taking clients, partners, and staff of the business. So, and this is something that you absolutely must be protecting in your employment agreements by having the proper non-solicitation clauses and the proper restraints, because this happens a lot and it can be devastating to a business when it happens on a grand scale. Because we've seen it happen again and again and again. So what's the solution? You need appropriate employment templates that are updated regularly. You must have your casual agreements and your contractor agreements updated now if they haven't been updated at some point in the last 6 months, because changes have just come in the last few months in relation to this area. And if you're interested in that, let us know. And, you know, I can come back one day and talk about some of those particular issues if you want. And we can send you more information about that. But if your casual agreements haven't been updated in the last few months, you must get them updated. But employment templates in any event should be updated annually, because things change all the time, and you just need to be on top of it. And you need to have proper internal, sorry, go ahead, Ben.
Yeah, I was just going to ask on how we approach that. Is that like with consent of the team member?
Yeah, so sometimes it's not about changing the employment agreements in relation to the employees who are in place at the time. It's just about updating your templates for the use with new employees who come into the business. Sometimes it is about implementing them throughout the in relation to the current employees. So we've obviously had a 0.5% increase in superannuation, for example. If employment agreements reference an incorrect superannuation amount, then obviously it makes sense that we're updating, you know, with the consent of our staff, who generally will be, you know, happy with that change. But, you know, that's just an example of things that can just change regularly in a business. So now can you go and rate yourself here? How protected do you feel? How protected do you feel in the classification of contractors, in the classification of casuals, in how you're dealing with the payments that you're making to your staff, and ensuring that you're complying with awards and those sorts of things? So give yourself a 0 to 5 in that category. Are you using up-to-date templates for employment and contractor agreements, including templates for your casuals that have been updated in the last 3 months? Give yourself a rating of 0 to 5 in that area. And how solid do you feel your internal processes are for dealing with employees and contractors in relation to your record keeping requirements? And how well do you think that you would be able to deal with unfair dismissal claims if they come up? You know, how well do you understand that area? Give yourself a rating of 0 to 5. Oakley dokley. Moving on now. Intellectual property. I just like putting the golden arches up here because it's one of one of the trademarks that is most recognised, I find, generally speaking, whether you eat there or not. Okay, so IP can be one of the most valuable assets in a business. I find many of our clients, until they hear us speak a bit and listen to the podcast, of course, Talking Law, they may not realize how much value sits in the intellectual property. I tell you, when you realize how much value sits in it, when someone tries to take it from you, when a competitor uses a similar brand, or if you receive a cease and desist action for a mark that you've used for years and years. We had a client that had been using a mark for 14 years that then received a cease and desist letter in relation to the use of their mark, which was just horrendous. And ultimately, even though we found a way through for them, it was going to be really expensive. So they ended up changing their whole brand after 14 years. So don't think time will necessarily save you if you haven't got a trademark protection in place. You know, of course, if staff leave with the intellectual property, that's another time that businesses suddenly realize how important their intellectual property is. So don't be one of these business owners who is forced to recognize the value of it because it's being taken away or threatened. Recognize it from the beginning. Recognize it as the value that it is and ensure that it's protected. There's a whole heap of different ways to protect intellectual property in your business. Some are just the practices that you put in place in your business. For trademarks, you can get a registered trademark and that forms a protection for you. But other areas are just things that you can do in your business. But make sure they're in place. So make sure you understand the value and that you understand how to protect that value and that value is in place.
Just a quick one on that one. Is a website or like the content on a website or a domain name, are they examples of IP that we can protect?
Yeah, absolutely. So the domain name can contain trademarks. So components of that can be trademark protected, depending on the certain situations. We've certainly done that to help people protect domains in the past. There's a specific sorts of things we need to go through to ensure we can do that, but that's an example. The website itself, the code will be protected by copyright, and the look and feel, the images, the text, all of that will be protected by copyright. We've acted in many cease and desist matters where we've been able to stop copycats who have a look and feel that they've created that's too similar to our clients, but they're really, you know, they really are trying to pretend to the market that they're affiliated or that they you know, that they're operating on confusion, or they've just thought it's a shortcut to them having to do the thinking themselves. So yeah, there's lots of ways, but in that instance, you need to be able to prove your own chain of title, that you are the original creator. And so when I say some of these things are things you can do yourself, once you understand that, you can put in place the processes to make sure you can prove you're the creator of these things. And one of the other issues is sometimes you're not the creator. Sometimes if you have some, you know, external agency creating the IP for you, you may not have had the appropriate IP assignment clauses. And we've just gone through a large project with a client where IP is absolutely fundamental in their business. And they suddenly realized IP ownership was everywhere because they'd had all these people working on it. And we went back to help them establish ownership and said, hold on, it's all over the shop. So we had to go back and reconstruct it, get all of the assignments in place. And then here was the body of proof that they're the owners. And ultimately, when they go to get investment in the business, which is where they're up to now, or sell, then they can prove the ownership of this key component of value in what sometimes is an intangible business.
And is there also like a kind of guideline or a train of thought that's, you know, if you used it first from a copyright perspective, then
can
like,
be,
like
but
a logo or a...
Yeah, so logos are back to trademarks. So you have to rely on the trademark laws and rules in relation to logos because they're it's complicated, but that's what you rely on, which is slightly different to copyright. But in both instances, so logos, you can get monopoly protection through registration, which is sort of like which is like this fabulous thing because you can prove, like, here's my certificate that says I'm the owner. Whereas things that are protected by copyright, you don't get a certificate that says you're the owner, but you need to go back. You need to have proof then of first creation. So it's about creation in that instance, and that the economic rights are owned by you. So you need to have whoever the creator was. If it wasn't your organization, you need moral rights waivers, IP assignment, a whole heap of things that are easy if you get someone on board who knows what they're doing. Probably very complicated if you don't understand what you're looking for yourself. So let's fill in this bit. Let's see, what's the question here? Intellectual property. Is your brand properly protected? So do you have trademark registrations for all of the components of your brand and your brands? There might be multiple brands that you use. Is that trademark registered? And trademark registration we like to see is both the word mark, so the word itself, and the compilation of the logo. And for any other brands that you might be running in addition to your business name and logo. Are you protecting your intellectual property? Do you even understand how to protect your other intellectual property? Give yourself a ranking of 0 to 5 there. Okay, solutions of brand protection, identify opportunities for licensing and franchising. I'm not going to talk about all of this, but just very quickly, if you're thinking of licensing or franchising in the future, you can be, you can put yourself in really hot water if you hadn't protected your brand early enough. So if you think that this is something that you might be considering for the future, you need to protect your brand early. Take cease and desist action. If you see copycats, take action against them. I've had people say to me, oh, what's the point in taking action? I don't want to sue them. But quite often I would say probably more than 80% of our examples of clients we work with, simply sending a cease and desist letter will, on the basis of, it being set up properly, on the basis of your rights that we set up, will be enough to get the outcome you're after. So that's a pretty quick and easy way to get the outcome. It's not like you're forced to litigate. In some instances, perhaps you might be, but we almost always resolve our clients' issues by something that's completely separate to litigation. And in fact, I'm not a big believer in litigation. I think there's generally always other ways to get there.
Great.
Okay, and that's why we'll try and set clients up really strongly from the beginning, because there's less need for litigation, which is super expensive if you have the right foundations in place from the beginning. Okay, so debt collection. I've got this picture here. You may be wondering, why has Joe got this old squeaky wagon here? It's to remind us to be the squeaky wheel with our clients. If you're not getting paid, you need to make noise and get paid, or get your clients into payment plans where you control the payment, not them. You've got them on credit cards, whatever the case may be. And I won't talk much about this because I talked about it a little bit in the beginning with cash flow. The point is, cash can absolutely flow quicker if you have strong debt collection processes in place and you follow them. And sometimes you just need to change them up every now and again because some clients can get too used to the same words. So how are your debt collection processes? Let's see, where's our question here? How strong are your systems for minimizing the number, the amount, and the incidence of outstanding debtors, because debtors cost you money. Slow cash flow costs your business money because it's taking money away from either things that you need to pay or an investment that you can remake in your business. Okay, business contracts.
I think we'll need to rapid fire we'll need to rapid fire the next few.
Okay, all right. Business contracts.
Time,
Let's common issues, taking on too much risk with customers, suppliers, and other contracts. I say where there's ambiguity, there's room for dispute. I won't talk to you about the 700K win. Just the very brief outline of it is we helped a client devise a really tight set of terms and conditions. They had a couple of issues against major corporates. We ended up winning them 2 settlements that added up to 700 grand in total. And of course, they loved us after that. So they thought their investment in creating those super strong terms and conditions was it paid off 100-fold for them. So this is super important. Spend time setting yourself up, because on the back end it can provide you a lot in terms of avoiding dispute and actually being able to have the power to deal with issues as they come up. Property leases. This is something that people don't often think about as business owners, but if premises are important to your business, you don't own them, they're leased, and it would cost you either in leakage out of the business in goodwill or in refit out or whatever in moving to a new premises. Super important that you understand there's a heap of leverage points in your leases. So don't just think it's something that you set and forget. Don't just accept options without really thinking about whether you can renegotiate. Now's a great time for renegotiation, by the way. So just understand leases are a hidden element of value in a business and should be looked at in that way. Okay, give yourself a ranking here. Suppliers, how strong are your current standard supplier terms, or do you just sign your suppliers' terms? And is there risk in those terms that you're signing? How strong is standard procedures when entering into new contracts and dealing with suppliers and business partners? And that's all about, do you understand the terms that you're signing when people are providing you with contracts? Do you use strong confidentiality agreements? We haven't talked about this, but that's something that is really important in your business if you're sharing confidential information about your business. How protected are you in property leases? Quickly give yourself a ranking of 0 to 5 for all of those. We just, in 2 minutes, I think we can finish the rest of this. Compliance with legislation, Privacy Act. Sorry?
Just a quick one. In the questionnaire, marketing is next.
Marketing, yes. I don't even know if I've got slides for it. So that's a really good point. So I might. So just really quickly talking about marketing. Thank you very much, Ben. What is our question about marketing? Oh, look, I think the main things to be aware of in your marketing is your compliance with this required not to be misleading and deceptive. Businesses can be really over the top in the way they discuss their wins sometimes. And you have to be aware of the risk of misleading and deceptive conduct, allegations against your business. We've seen heaps of this. You have to be careful about what others post on your social media pages and remove things that might be offensive to third parties. Be careful about defamation, potential defamation claims. You just have to not let discussions run to a motive on social media pages that you're controlling, and be super careful in your marketing that you're not that you're in compliance with the spam rules. And if you don't know them, then contact us. I think we've got some information sheets on that as well. So I think they're sort of the main, and website terms and privacy policy. Privacy comes back to this concept of this legislation area. Many businesses aren't captured by the Privacy Act. You're not captured if your turnover is less than 3 million, unless you deal with sensitive information. So you're a healthcare provider, you're a GP, you're a dentist, you're a gym, you're otherwise dealing with some sort of sensitive or medical information, or you trade in personal information. And personal information is stuff like email lists and stuff like that. So if you're on selling them or trading them in some way, then you're captured by the Privacy Act. Many businesses also forget to bear in mind that as you pass through that 3 million mark, if you hadn't been captured prior to then, you'll be captured at that point. And then the last thing is in agreements that you sign with others. Say, for example, if you have contracts with large clients who might be listed entities or whatever, they may say you have to comply with the Privacy Act in relation to certain components, and you then are captured by the Privacy Act. Do you see what I mean? So you can be captured in all sorts of different ways. So be careful that the privacy policies that you're using on your website, you should always have a privacy policy and website terms and conditions. Make sure they're up to date and compliant. So give yourself a ranking there. After everything I've talked about that, are you 0 or are you bulletproof, protected? All right, so and moving on to legislation, I think you can fill in here, are you protected? Not at all, or bulletproof protection in terms of understanding the Privacy Act, understanding the requirements of misleading and deceptive conduct, or the restrictions against misleading and deceptive conduct? Do you understand the consumer guarantee? So they're minimum guarantees that you owe to your customers in relation to the goods or services that you provide. Do you understand unfair contract legislation that will limit the terms that you can have in your agreements with your customers, where those agreements are standard contracts? So many businesses just have no idea about this area and find, once we have a look at it for them, that they're completely non-compliant because I had no idea. So how protected do you think you are? And just one other thing I just want to point your mind to, you as a small business are sometimes protected by this legislation. So you're protected by unfair contracts terms legislation when you have suppliers who are larger businesses with you. So this can be an opportunity for your business. You're protected by the consumer guarantees. And if you don't understand what that is, shoot us a note. I think we've got an information sheet on this one too. Awesome. So anyway, so fill in how protected you are. And I think we're at the end here. How are we going for time? So self-assessment, good work. Okay. So finishing the end, we've got a product. If you're interested in it, great. If you're not, no worries at all. Just click yes, no, or maybe. If you want to build in, if you want an assessment by a lawyer, so our legal team do a telephone call, run you through all of these areas. I think we've got a discounted price for you here. You can probably see it, but I can't remember what it is. But anyway, whatever it says, the discounted price is the discount that we're offering to you. I think it's $395 plus GST. If you want that, awesome, we can provide that to you. If you don't, that's, no worries at all. I just wanted to say that, just remind you that the 4 pillars to protect growing businesses are simple, sort of. Remember that when you're in fast growth, you're the most vulnerable. That's the first point. That's super important, because that's when you're super busy on growth and you forget to make sure that your legal foundations and infrastructure are catching up to where you are and where you want to be. Being proactive is far cheaper than being reactive. I cannot emphasize this enough. You can't effectively grow a business without getting the foundation solid, because you'll end up spending all of your time in small niggling disputes that are happening along the way, or something huge as a massive landmine. But most often it's those small niggling disputes that cause, us as business owners to just get exhausted with growth. That can happen. And then just my last, this is my perspective on growth, and it's the subject that we've already spoken about in the last webinar that I was on with you all. Exponential growth comes from organic plus acquisition. So don't forget to think about the possible power of acquisition in a business. So we come from the perspective of de-risking a business first, and then building deals that build your business. So we've got a 4-step formula to ensure that growing businesses have the foundations to withstand high growth and the smarts to be building a business with high sale value. This is our Fortify methodology. We identify your value, we protect that value, we predict where the risk might be in the business before it turns into a dispute, and we prevent issues from occurring. So this is sort of our approach to fortifying, de-risking the business and protecting it. That's all. These are the things we work through. It's all the things that we work through in our assessment: founder sorted, structure, customers, team, suppliers, IP, regulation and legislation, cash collection, getting cash in, contracts and future plans. So if you're interested in that, just shoot us an email. Be happy to talk to you about that process in your business. Don't need to talk about acquire, prime for exit. And if you want a free call, you can speak to our legal eagles at Aspect Legal. Maybe Nikki, if you can shoot in the chat there, free call number, and of course the discounted legal health check. $395 plus GST. Now make sure you hit the submit button. That's the most important button for you to press, so you actually get all of your results shot out to your email address. And if you've pressed submit, you will have them right now. Now, unfortunately, you have to apologize. There's no funky score yet. We'll send you a score at some point, but at least you can go through and you can see how you rated yourself, and then keep that, and then just go fill it in, next year if you want, and compare yourself. That's it. I hope I didn't talk too far over time. Ben, over to you.
That's all good. No, thanks again, Joanna. Always love having you on. And yeah, even as we're going through that, I think we probably need to do more sort of deep dives on each of those sections. Like, you know, employment law is something we get asked stuff around and we're like, you know,
it's a tricky area, isn't it? You know, it is. And there's so many things that can go wrong. So it's certainly a topic in and of itself.
Yeah, for sure. But yep, so we'll have to line that up. But thanks again, and thanks to everyone who joined. There is going to be a recording if you do want to check in on anything that we did chat through today. The link will be sent usually just a couple of hours after the webinar finishes. So thanks again, everyone, and I'll see you at the next webinar.
Thank you. Thanks, guys. Bye.
Awesome.